Hello, welcome back to this week's market update. Today is Monday, December 1st, 2025, and let's jump right in. Looking at last week's market performance, stocks rose during the shortened holiday week as economic concerns eased, tech bubble worries faded, and confidence grew around a potential rate cut at the December Fed meeting. Markets ended the month on a stronger note with the Nasdaq Composite up just shy of 5% last week, the S&P 500 up about 3.7% last week, and the Dow up 3.18% last week. Moving into some economic data from last week, September's retail sales were slightly softer than expected at 0.2% month over month. The modest headline gain was held back by a 0.3% decline in auto-related sales, which offset strength in several other categories. On an annual basis, retail sales were up 4.3%, outpacing inflation and indicating that consumer demand appears relatively resilient. Non-store retailers, largely reflecting online shopping, rose 6% year over year, while food and drinking places increased 6.7%, underscoring continued strength in that discretionary spending. Unlike the steady month of retail sales that we got in September, U.S. consumer confidence declined sharply in November, falling to its lowest level since April. The pullback was broad-based across the index's components, with respondents reporting lower confidence in job availability, income prospects, and overall financial conditions, both in the current and forward-looking indexes. By demographic group, confidence improved slightly among individuals under age 35, but declined across all other age brackets. By income group, those earning less than $15,000 annually were the only group to see an improvement, although they remain the least optimistic overall. And then lastly, by politics, confidence was down across the spectrum, falling for both Democrats and Republicans, but most sharply for independents. Overall, the report highlights a continued disconnect in consumer behavior as sentiment has softened while spending remains resilient, suggesting that consumers continue to act more confidently than they report feeling. We also got the delayed wholesale inflation numbers, otherwise known as the Producer Price Index, PPI, for the month of September last week. Headline prices rose 2.7% from a year ago, while core prices rose 2.9%, both stable from August. On a monthly basis, prices were up 0.3%, while core prices were up just 0.1%. And a lot of this came from a 1.1% increase in the month of food prices and a 3.5% increase in energy prices. So both of these categories are quite volatile. We'll have to see if the trend continues, but for now, this looks to be another stable month of inflationary data, opening the door for a December rate cut. Last but not least, initial jobless claims moved lower over the past 2 months after the temporary spike seen in early September. For the week ending November 22nd, claims are reported at 216,000, a level that remained historically low and also better than economists had expected. As shutdown delayed data continues to be released, the report offered further confirmation of a stable labor market and did not reveal any unexpected signs of weakness. So that concludes this week's market update. It was a shorter one due to the holiday last week. We hope you all had a great Thanksgiving, and we look forward to seeing you on another update very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.